almost every investment in Africa is impactful because of the economic impact it has, not just creating jobs, but also creating wealth and supporting innovation that addresses real problems in society. But getting past that and seeing that Africa has amazing FinTech opportunities, has amazing and fast-growing market, has an emerging population that is, like I was saying earlier, digitizing so quickly, it will leapfrog the US and Europe.
Hello, everyone, and welcome to Profit to the People, the official podcast of Republic, where we believe you have the power to invest in the future you believe in. I'm your host, Lisa Carmen Wang, and I'll be taking you behind the scenes to meet the team, founders, and investors in our community who share their insights on the future of investing and how they're bringing profit back to the people. Today, I'm here with Jim Chu. He's the founder and CEO of Untapped and a longtime investor in emerging and frontier markets. Specifically, he has identified a huge missed opportunity to invest. A $5.2 trillion investment gap in SMEs in developing countries, and the $3.9 trillion chasm in the global south, Africa, Latin America, and Asia, which he refers to as a VC blind spot. Untapped Global is creating alternative financing opportunities for emerging market entrepreneurs to solve real-world problems that in turn make their communities more prosperous. Untapped is also an investor in ASOC. ASOC is tackling the $360 billion credit gap in Africa by providing asset-backed loans. Jim, so excited to have you on the show. And to start off, I'd love for you to just dive into why you're focusing on Africa and why this VC blind spot in particular, this $5.2 trillion investment opportunity.
Well, first of all, thank you for having me. And thank you for stating our mission so eloquently, much better than I can. In terms of why Africa, I think that's a great question. And a lot of people know that Africa is a booming market, right? It has incredible population growth. Africa is set to add another billion people to its population in the next 30 years, another billion. So you can imagine another China popping up in the next 30 years, and that's in Africa. Also, and I think this is a very important change because, Africa's been growing for a while, right? It's been there and it's been growing at a nice 6% GDP clip for a while. But what's changed in the last 10 years, 10, 20 years, is this wave of digitalization that's happened, especially in informal markets. So what's happening is that everybody, especially those who were outside of the formal markets in the past, now have cell phones, now are transacting over digital means, which means that we can now figure out better ways of not only extracting value, but also creating value with the entrepreneurs on the ground through informal markets and a digital landscape. So to me, that's the most exciting piece. How do we go from peer-to-peer analog to a peer-to-peer digital landscape that we in the US and Europe are going towards as well, but to allow Africa to leapfrog what we're doing here in developed markets.
Was there a personal reason why you really got invested in this area?
Yeah, also a great question. So I spent most of my career in tech, 90s and 2000s. I started investing as an angel investor in the 2000s. And in 2010, I did a very typical phenomenon. I wanted to, quote unquote, save the world, if you will. And I started volunteering. And I realized, though, from my experience, or I concluded, I should say, that aid and charity wasn't really solving the problem. And it was, in many cases, perpetuating the problem. And so perhaps coming from a business background, I said, let's approach this differently and see if we can solve it through a business means, through a business approach. And when I did that, I found all these holes in the marketplace, right? All these holes, especially on the financing side. So, for example, one of the companies I started was a water infrastructure company in Haiti. And today the company that I started back in 2013 serves over 200,000 people with clean water through an entrepreneurial network, all financially sustainably. It's great. Personally, I consider it a failure because we should be serving 2 million people, 3 million people. And one of the main reasons we weren't able to do that was because we weren't able to access the right kind of CapEx funding to scale. And so when I identified that, I was like, well, this should be an easy problem to fix, right? We just go and explain it and it works. No, not that easy. Institutions who are giving out money have entrenched rules. they have entrenched processes, they have entrenched mindsets about how to invest. And so I realized that we really need to reinvent our whole idea of investing in Africa and also reinvent the instruments that we invest with. So it's really a personal mission of mine because I see every day how much value is being squandered because of something as stupid as we don't have the right financing instrument. And so I meet people, entrepreneurs, see opportunities that come across that, wow, I just said, wow, if we just had the right capital to make this work, what could this become?
Yeah. And I think that that's really where the innovation is going to come. It's people who are questioning the system in and of itself, the structures and why these kind of legacy funds or just ways of doing things don't work. You can't just copy and paste it to different populations. So it does require a certain level of open-mindedness to invest in developing markets. What would you recommend to people who maybe are writing off Africa as a potential investment opportunity?
So before I answer that, can I just go back to something you just said, which I think is very insightful about changing how we do things, how we invest, and how we often just follow the legacy, the way things are done. I think that's one of the big problems. I think, and the fact that everybody has to sell something to the next person up the chain is a problem, right? A fund manager needs to sell to LPs, and LPs only understand what's commonly accepted. I think that's one of the big issues. And because we follow what people did in the past, we're not able to innovate enough in the financing sector. And some of this is really just about networks. So I started investing in venture funds back in the mid 2000s. And one of the first funds I invested in did quite well. But it wasn't until only a few years ago that I actually attended one of the first LP meetings. I did, and I realized I'm the only non-white male under 50 at this freaking meeting. And it wasn't as if the GPs or general partners were saying, well, we're only going to take money from white males. But it was part of their network. And so there's this whole ecosystem of venture capital that is exclusive, not because it's intentionally exclusive, but because of the way it's set up. And so I think changing how that works is really critical to not only democratizing wealth creation, but also creating opportunities to invest in Africa. Because, and I am answering your question, because investing in Africa takes a different mindset. Right? Because if you apply the same metrics and use the same structures for how you invest in a US company in US markets to Africa, you'll probably fail. And so investing in Africa, what we've done is we tried to create new instruments or new approaches to investing that are adapted to exactly how Africa works. So for example, we have a CapEx facility that focuses on CapEx, meaning capital expenditures, that helps SMEs in Africa get the equipment they need to grow. That's not really a problem in the US or Europe, so no one thinks about it. But in Africa, everyone needs money to buy more refrigerators, to buy more motorcycles, to buy more whatever equipment there is. And the money's not available. But if you apply a venture capital model to that business need, it's not an opportunity. Oh, I don't want to invest in a CapEx or an asset heavy company that, I have no idea whether there's an exit market. It doesn't fit. But does that mean there isn't an opportunity? There absolutely is. And so if we create we hope we've created the right instrument that allows us to capture that opportunity with SMEs and make that available to investors around the world, we hope that we can not only democratize investing, but also create a whole new channel of capital for a completely untapped market.
And I think what you've just touched upon there is the importance of nuance and empathy when it comes to finding new opportunities to invest that isn't the status quo, which when I think about the future of investing as a whole, that's exactly the type of thing that's required because we can't treat everyone the same. We can't expect that the way that we've always, and it's not even always, it's only actually quite recently that Silicon Valley has, has risen into power. And so it's going to take a new set of diverse investors to come in and say, actually, just copy pasting and saying this is the way things are done isn't going to work. We actually have to listen and observe and see the way that people are doing things differently and what needs to happen for each individual society or types of people.
Yeah, and just another point to that, I think structurally that's very difficult for entrenched fund managers, for example, to do, because when they go talk to an LP, a pension fund or an institutional investor and so on, you know, I'm not trying to be negative, but everybody has a fiduciary responsibility and they can't do anything that's outside of the bounds. And, if you bring something new, it's like, oh, that's scary. But individual investors have a much broader, if you will, mandate, because they're managing their own money. And when they see value, when they see opportunity, they're much more able to adapt their investing to that opportunity. And so I think what Republic is doing, going directly to the people and showing them this is the investment opportunity, and doing some curation, of course, and doing some of that fine tuning, but then making those opportunities available. I think that's where the future is. I think that will change how investing is done, but it will also allow us to invest in the right opportunities in places like Africa.
Yeah. So in addition to what we just talked about, what other challenges are you facing in even sharing this message or getting people on board? Or would you say people are generally receptive and really starting to pick up the understanding about developing market opportunities?
Yeah, so I think one of the biggest challenges is getting past people's preconceptions of what developing markets or frontier markets are about and what the opportunities are. I think subconsciously or consciously, we all have an idea. Oh, yes, let's invest in Africa. Yeah, I'm an impact investor. Nod, nod. Wait, hold on here. Do you have to be an impact investor to invest in Africa? I would argue that almost every investment in Africa is impactful because of the economic impact it has, not just creating jobs, but also creating wealth and supporting innovation that addresses real problems in society. But getting past that and seeing that Africa has amazing FinTech opportunities, has amazing and fast-growing market, has an emerging population that is, like I was saying earlier, digitizing so quickly, it will leapfrog the US and Europe. Understanding that better and then also investing more wisely because you understand it better, I think that's the challenge. So one of the things that we did to try to address this gap was we started a program called the Nest. And it's a investment network where our goal is to connect international investors with local entrepreneurs. And it started off actually during COVID, and I was actually watching Shark Tank with my kids, and I was like, hey, that would be so cool if we could do that for emerging market entrepreneurs. So we actually set up a Zoom-based pitch session for emerging market entrepreneurs. And I'd love to say this was all planned, but it wasn't. But what we found was that it completely changed people's preconceptions of what Africa was and what the market opportunity for investing in Africa was. When they saw or when they heard from these entrepreneurs who were talking about their startups, talking about their markets, showing what they've done in terms of traction, you could see it in people's eyes, and maybe I'm imagining it, but I could see it in people's eyes, in the investors' eyes. Oh, wait, Silicon Valley isn't the only place where there are good entrepreneurs. Wait, that's a really interesting market. That's an incredible entrepreneur. Maybe I should be investing. And so creating those, going back to what you were saying earlier about it's about empathy and understanding, right? But creating those direct human connections between the individual entrepreneur and the investor, that can create the understanding and the empathy necessary for good quality investing in not just frontier markets, but in any market that you go into.
That's great. And when it comes to diligencing, then, is there any difference, diligencing companies coming out of Africa or other developing markets versus, say, a startup coming out of Silicon Valley?
Good question. I think fundamentally no, but I think practically speaking, there's loads of differences in the sense, both for the entrepreneur and for the investor. Let me start off with one stat and then get to my point. In Kenya, close to 90% of all venture funding goes to international entrepreneurs, non-Kenyan entrepreneurs who happen to be white. Now, you can respond to that and say, oh my God, that's, there's racism. Hold on here, right? A lot of this is about networks. Going back to the story about the first venture fund that I invested in. It's about who you know. And so a American entrepreneur starting a company in Kenya, she can fly back to the US and have as many meetings as she wants to, like that. And she can afford to. A Kenyan entrepreneur cannot. And so I think it's very important for investors to realize that your typical way of deal discovery, your typical way of doing diligence that you do for your US-based startups may not work simply because of geography, simply because of geographic distance, simply because of cultural distance. And so getting partners in place, whether they're fellow angel investors or even going yourself and meeting the entrepreneurs on the ground in Kenya, that's very helpful because, and trying to stray outside of your usual networks, I think is very important. I don't know if I answered your question or not.
Yeah, I mean, it seems like, as you're saying, just fundamentally, you're still evaluating company for its ROI. It's not about, and I want to go back to this idea of like impact. It's like we think that impact and profitability are mutually exclusive, or at least that for some reason that narrative has developed in the financial world. It's like you can't do good and make money. And I think hopefully more and more as we speak about these types of things and showcase these types of opportunities, that impact and profitability actually amplify each other. Right? The more impact you make, the more profit you make, and a virtuous cycle. And actually, if you're not creating true impact, it's probably less profitable in the long run.
Absolutely. So I'd love to speak to that if you don't mind.
Sure.
In the first years when I launched this Haitian company that does water, I had this belief that, oh yes, impact investing, that's a thing, and that's going to be the solution. And I slowly over time realized that it's a bit of a misnomer because you obviously exceptions, but you really had two groups of people. You had traditional investors looking at ROI that had a secondary and tertiary social impact objectives, ESG objectives. And then very far on the other side, you had philanthropists who had a market view on how to give their philanthropy. And the interests of the two sides are actually quite different. And I think one of the issues with impact investing is that because you're not only able to, but you're almost encouraged to add all these other factors into your decision-making process. If you don't prioritize those well, it can get very, very messy. And so I started realizing that the difference between Group A and Group B that I mentioned earlier was really not about, that they're different people or they care less or they care more. They're just prioritizing some of these factors differently. I think one of the challenges with entrepreneurs raising money from impact investors is that you just have no idea what their impact, what their priorities are. Whereas in traditional investing, generally speaking, they want to make money. They want to have a good ROI. And so I think the term impact investing can be dangerous because it can confuse. And I think from an entrepreneurial perspective and also from a investor perspective, it's useful to be very clear on what your priorities are. Do you want to invest for impact? Sure. What are your priorities? Be very clear about it. What comes first? Do you want a company that's sustainable and has a gender lens impact? Okay. Or do you want a really good return but also have the secondary and tertiary impacts? But there's nothing preventing both to come together in terms of impact and profit.
Absolutely. I think it's such a fascinating discussion, and a longer term one, and one that we frequently have at Republic is just, even as we talk about passion, profit, and power, it's that passion and profit don't need to be mutually exclusive. And actually, when you combine them, that's even more powerful.
Absolutely. It's interesting that you used the word power in there. I think part of this is about decentralizing power and making sure that the channels through which power flows, and money is power to a great extent, isn't being controlled by just a certain kind of process or a certain group of people, that it really can be broad. And I'm not sitting here trying to plug Republic all the time, but I think platforms like Republic really does help with that in the sense of democratizing the flow of power and really getting power to those underrepresented, under kind of the blind spots. Let's just make it a simple word: the blind spots that your big institutional investors don't see or cannot access simply because of the rules that they have.
Yeah. Yeah. I think it's a really exciting time, just as more underrepresented voices are being given that power to even speak and be heard. And I see a future where the types of companies that are leading, the types of innovation, the types of CEOs are truly representative of the population itself and giving voices to all those people.
I find I watch with very intense interest everything that happened with Robinhood and GameStop and the whole thing with Reddit. Obviously that's not what we want to recreate, but I think it really does show the power of what individual investors can do. And if we can channel that appropriately, my goal is to channel that towards hustling entrepreneurs in Africa and other frontier markets. But if we can channel that direct connection between investors and entrepreneurs, I think we're going to have a much more efficient deployment of capital, much more equitable deployment of capital, and ultimately a more equitable society.
Yeah, definitely. One interesting thing that I read, and this is slightly on a different topic, is that Africa is, we know, rapidly urbanizing population, the fastest growing continent on the planet. It's also the only region on the globe where more women than men choose to become entrepreneurs. But similarly to the U.S., there's also a significant funding disparity between male and female founders in Africa, which is a $42 billion disparity. So curious just on your commentary on that from any aspect that you've seen or worked through it.
Yeah, I think the dynamics are similar, although the precise details are quite different. The traditional power and the traditional means of production are controlled by men in most African countries. And obviously there's a broad generalization. There are a lot of exceptions, but that's generally the case. And so if you look at the distribution of formal companies versus informal companies, almost all the formal businesses, industrial businesses, are controlled by men and their family businesses. But if you look at the informal economy, who are the merchants? Who are the traders? Who are the hustlers on the ground? Disproportionately versus the old industrial class, they're women. And so going back to what I was saying earlier about the formalization or digitization, I should say, of informal markets, I think if we're able to capture this opportunity with digitization, it's going to have a disproportionate positive impact on women and giving opportunities to women.
Great. Yeah, I love that. And it's almost a similar conversation as we talk about the rise of the female economy here in the US too, of who are our primary consumers, who are the decision makers on purchasing decisions, within households.
Right.
Yeah. So as you look forward in your investing journey, what are you most excited about?
Well, I think I've already mentioned two of the most exciting. One is this trend towards democratization. Personally, I see it as a trend starting all the way back with, Charles Schwab and low commission trading, and then broadening that. I think that's just a continuing trend of democratization of investing. And I'm very happy to see more and more companies, whether they be Republic or companies like Cadence and others, or even Yield Street, that are taking what were hitherto exclusive enclaves for institutional investors or the very wealthy, and making those available to a broader population. So I think that trend is going to be very interesting. And I think that trend combined with the ability of digitization to, I'm going to use the word tokenize, but I don't want to necessarily imply that we have to have blockchain or crypto involved, but to tokenize assets, to tokenize investments in a way that is digestible by smaller investors and more accountable to smaller investors, that's going to change the game completely. Because if you look at the function of intermediaries, a venture fund, the function of even the stock market, right? They're an intermediary to connect investors and those people with the money and those who need the money. And I think we're going into an era where hopefully in 50 years, through digital platforms like Republic, Cadence, et cetera, and ours as well, I hope, and the emergence of these digital assets and digital tokenized, in quotes, investment opportunities on the ground, we'll see a much more direct, disintermediated connection between investors and entrepreneurs. A lot of gobbledygook there. So let me just break it down to the practicality, right? Right now, you put your money into a venture fund. Maybe in 7 years, you get a nice return. Maybe, if you have a good venture fund, you get a nice quarterly report, nice pictures. Oh, everybody's happy. Yeah, you're a good guy. Wonderful. In the future, and in fact, this is what we do on our platform, but very narrow niche of kind of investment opportunities. You log in online, you put in $100, and you see your money go to work the next week. And every day, you see how much you've made in return, in profit sharing, revenue sharing. But you also see in real time with real numbers, because they're coming straight from the assets digitally. They're coming straight from the payment systems digitally. You see how much incremental revenue you're helping that entrepreneur generate. And you can message them right away. And they're posting a selfie of the asset that you financed or the customer that you just served. And you go in a very Facebook-like fashion, you go and see all the other entrepreneurs that you financed. And the entrepreneurs correspond with and engage, Twitter-like, with all the investors that have invested in them. I think that's the wave of the future. And disintermediation. A lot of people talk about decentralized finance, and we don't have to go all the way there. We don't have to be using crypto. We don't have to be blockchaining everything. Technology platforms already can create a much more direct connection between investor and investee.
Amazing. And I think what you've really touched upon there is the connectedness and tangibility and transparency of how investors can see their investments actually working in the real world. And I think one of the biggest challenges, especially for early or first-time investors, is that in the past, especially with these traditional systems, it's like you put your money in and you have no idea what's really happening. Are there going to be fees? Is someone going to take your money? Is it actually creating any sort of impact? And I think this conversation around, people want their dollar to matter. And they want to know where it's going to, and they want to feel good about it in addition to getting that return. So, at Republic, we say we're investing in a future that is diverse, sustainable, and connected. And those are the three things that we really focus on in terms of what kinds of companies we list, what kinds of investors we attract. So it seems all very aligned, and I'm very much on board.
Follow along to that, to just your comment here. I think you make a really critical point here, which is, and I would say it's partly generational. I mean, obviously, there's people in every generation who feel this way, but I think much more so the millennial generation, those that are in their 20s and 30s, feel much more strongly that their money needs to matter. My generation, we just want to make money. We don't give a shit. But I think the millennial generation, I think what you do with your money matters. And on top of that, the tools through which you share and connect to others is much more pertinent to the lives of a 30-some-year-old. And so I see a world where, going back to my previous example, let's get on this platform. Oh, hey, my friend Marty just invested in a bunch of stock motorcycles in Uganda. Wow, that's really cool. And I saw a bunch of selfies of the motorcycle taxi drivers uploading wow, that's really cool. Why don't I go join him? Oh, and through a platform like Republic or ours, let's form a quick investment club to put in a bunch more money into that. And it all happens online, it all happens digitally, and there's not a single fund manager in sight.
Absolutely agree. And I want to just finish this off with a quote that you shared that I read, an idea that you live by, which is, don't worry about the level of individual prominence you have achieved. Worry about the individuals you have helped become better people. And that was a quote by Clayton Christensen. So why don't you share with us, just as a final note, why that is a driving idea that you live by, and any last words you'd like to share with our audience?
Yeah. So I think that drives pretty much everything. I just, going back to what I was saying earlier, I've seen so many people that when given the right opportunity, they blossom. And, I look around here in the US, and um, there's opportunity everywhere. And to a great extent, that's why a lot of people want to move to places like the US, Canada, and other places where there's lots of economic opportunity. What I've seen that in certain markets, that when people do, they struggle every day to even find the opportunities. And when they find them, and when they get to them, the amount of human potential, and it sounds cheesy, but I'm going to come back to an example. The amount of human potential that is unlocked is truly amazing, and it gives me immense pleasure to see it. I had one employee in Haiti. He came on as an intern, and in fact, he was an IT intern. By the way, he wasn't a very good IT intern. I knew more about networking than he did, but he turned out to be an incredible hustling entrepreneur. Right? Every week, he would come with me with an idea, and initially, was like, "Whoa, what a horrible idea!" Or, "Oh, that's really tiny. I mean, what do you think you're going to do with that?" But over the years, he developed more and more, and his ideas became more and more promising. And now he runs all of kind of the sales in Haiti for the company. And I remember one day dropping him off at his home. And I'd never been to his home before. We had been out in the field, and we were driving past his home. And we dropped him off and realized, wow, he lives kind of in the slum. And his house is actually a tiny house where he lives with 24 people. And I realized, wow, the reason he was coming with an idea every week was because he was hungry for opportunity. And so I want to see not just dozens, I want to directly connect with dozens of people like him. But I think platforms like what we're creating, what Republic is doing, can give opportunity to millions more of people like him. So that opportunity is no longer rationed based on your education, based on your race, based on where you grew up, where you live, where you're born, but rather based on your ability to capture those opportunities.
Great words to finish off with. Thank you so much, Jim, for the work that you're doing, the communities that you're investing in, the opportunities that you're creating for all kinds of people. And thank you again for joining us on Profit to the People.
Thank you very much, Lisa. It was a pleasure.
This podcast is provided for educational purposes only by Republic and Republic.co. Nothing discussed should be construed as legal, tax, accounting, or investment advice. The views of the presenters may not be the views of Republic and its affiliates. Always consult with trusted professional advisors before making investments. Private investments are inherently illiquid and may result in a total loss. All rights reserved.